The stock went from $63 a share to 34 cents. So, and there was a family, the Bucksbaum family owned, I think, about 25% of the company, and they had a $5 billion of stock that was worth $25 million or something by the time we bought a stake in the business. And what interested me was, I thought the assets were worth substantially more than the liabilities. The company had $27 billion of debt and had $100 million value of the equity, down from like $20 billion. Okay. And one that, sort of an interesting place to start with the stock down 99%. But the fundamental drivers of the mall business are occupancy. How occupied are the malls? Occupancy was up year on year between 07 and 08, interestingly. Net operating income, which is kind of a measure of cash flow from the malls, that was up year on year. So kind of the underlying fundamentals were doing fine. The only problem they had is they had billions of dollars of debt that they had to repay. They couldn't repay. And if you kind of examine the bankruptcy code, that it's precisely designed for a situation like this, where it's kind of this resting place you can go to kind of restructure your business. Now, the problem was that every other company that had gone bankrupt, the shareholders got wiped out. And so the market's seeing every previous example, the shareholders get wiped out. The assumption is the stock's going to go to zero. But that's not what the bankruptcy code says.